So we had quite a day today. We started with a fireside chat with Joe. Then we went to the 10,000-foot level institutional panel, now venture capital perspective, and now we're going to the grassroots level with the founders. So we try to assemble a very diverse group of founders here, both in terms of the types of companies that they represent as well as their backgrounds. So why don't we go just a quick rounds of introductions. And when you do that, if you don't mind sharing, are you the first-time founder, second-time, fifth-time founder? What was your previous founding background?
I'm Mark Long, CEO of Neon. We're making a AAA blockchain shooter called Shrapnel. This is my fifth startup.
My name is Paul Kim. I'm the CEO of Notifi. I guess this is my second startup. Yeah, we are the Web3 Twilio. We do the communication and messaging layer for a lot of the projects to actually have conversations with their users.
Hi, Pat Larsen, CEO, co-founder of ZenLedger, first-time founder. And did you want us to talk about background?
Mm-hmm.
Okay. Background, military aviation. I flew helicopters, have an MBA in the startups, and then I've worked in finance and Amazon and a couple startups before this.
Cool. Chris Lee, CEO of Oak Network. I used to work at Microsoft, but not at Seattle, Mountain View. So Oak Network is my first crypto startup. We build Stripe for Web3. Basically, it's a payment infrastructure to enable recurring payments and the subscription business model. And thanks for having us here.
Thanks for being here. Krishna.
Hey, my name is Krishna. I'm on the founding team of Quantstamp and also a co-founder of Chainproof, which is our insurance subsidiary. So what Quantstamp does is we're one of the leading cybersecurity companies in blockchain, and Chainproof is the world's first regulated insurance company for smart contracts. And this is the first startup that I've co-founded.
Excellent. So why don't we start with just understanding, why did you decide to build in the Web3 space? What inspired you to join this ethos? Mark.
In the last 10 years in the video game industry, we've seen a shift from packaged goods to in-app purchases, mostly driven by free-to-play. But the truth is, you never really own any of the digital objects that you buy in the game. And there's strong existence proof that there's a very large appetite for this. There's a game called Counter-Strike's played by the most hardcore FPS players. And there's a $1 billion gray market for some very primitive, what we call skins. So a skin for a knife, a rifle, and a crate. $1 billion market that has no provenance. So it's perfect fit for digital ownership.
I got into crypto probably about a year ago and discovered that it was a very poor user experience. And I had a thesis that in order to unlock the next billion users into this technology, that certain primitives would be needed, and one of which would be messaging and communication. So, had a pretty quick MVP built out and work with some applications to see if we could improve the user experience and do the whole engagement, re-engagement, marketing, communication that people are anticipating in the future, and found that there was a good product market fit there. So yeah, started the company.
In 2017, as I was talking and looking through fintech ideas, a lot of smart people in crypto said, like, hey, I can't do my taxes, my accountant can't do my taxes, my lawyer has no idea what they're doing. And I looked at existing offerings, and there was no like automation, no UI UX, no customer service. And so the idea fit in a box. There was no like execution risk per se, and just very incrementally started building. And it turns out if you bring in someone's transactions, help them clean it up and report out, you can do that at scale with a lot of integrations, like other things become valuable that you can do on top of that engine. Next time.
We built Stripe for Web3. Basically, the problem is that there's no recurring payments, no subscription business model for Web3. The reason is that when Ethereum founders built the Ethereum, like launched the mainnet, they exclusively decided that they will not build the time lock operator code for the underlying technology. So the data structure of the transaction, Ethereum transaction, actually doesn't support future transactions. So we were like, okay, we'll build a new public blockchain and we'll facilitate other blockchains through bridges. So to enable the auto payments, right? So there's so many use cases can be built on top of this. And we can even build a stop loss trade for DEXs. And my personal interest is that we only need to build a decentralized OnlyFans to get the crypto to 1 billion users.
I'll build that.
Krishna?
So I guess about 6-7 years ago, we had the DAO hack, and shortly after that, the DAO hack was a massive event, right? People lost a lot of money. Ethereum hard forked, and it was a systemic risk. And right after that, I was hosting an Ethereum meetup in Vancouver and ran into Richard at my meetup. And one of the things that he was working on was a high frequency trading fund. Shortly after, he told me that, hey, I have this idea to launch a security firm for smart contracts. And to me, that was obviously a very compelling narrative, because we already saw the DAO hack, the parity hack, and several hacks, and it became very clear that if Ethereum were to scale, security would be basically one of its pillars. And without good security, you're not going to be able to have trust in this space. So that was the aha moment for me. And for Chainproof, which is our insurance subsidiary, we realized that as DeFi scaled, we would see a huge demand for deposit protection and principal protection, especially from institutional players. And that's the reason that we launched Chainproof as our next venture.
Yeah, great. So we have kind of a mixed audience here. Half of you are builders, half of you are investors. So for those of you who are builders, we did a survey prior to this event asking them, what is your most existential problem today? And number one answer, with over 52% of respondents, said finding product market fit. This is actually surprising because we ran a similar survey 2 months ago, and the number one answer was compliance and regulatory challenges. Today, it seems product market fit is top of mind. So my first question is, how do you define product market fit in Web3?
We have a really interesting dilemma with product market fit. The core gamer community is up in arms against NFTs in particular, and Web3 generally. This is caused by primarily the example games that are out right now. They're just egregious, awful user experiences that are driven primarily by rampant speculation. But also the major platforms like Valve and Steam, Xbox, Sony have banned blockchain games from their platforms, largely because of scams, theft, and those kind of issues. So we're up against this wave of anti-blockchain, but at the same time, we believe there's a perfect fit for not only digital ownership, but a creator economy. So the game I'm building is a thesis I've had for a long time, that this generation of gamers has grown up learning to visually program in Minecraft and then age into Roblox, which is kind of like the Legos of game creation. Fortnite today, when you play it, over 50% of the engagement by players is now created by other players. But when you turn 18 to 35, when you get to the core demographic for us, there's nothing for you to age into. So we believe this community or this demographic has grown up dying to make their own kind of games, and that's the platform we're building. So I hope we're right about that.
So when you answer, and we can keep going, but when you answer the question, can you help us define how do you define product market fit? Is it you found your first customer and there you go, you got a product market fit? Or you acquired 10% of the market share, something that would help us know, do we have a product market fit or not?
So, I mean, we started probably around April, acquiring some customers and getting some early data and traction. The way I define product market fit, at least for the time being in our stage, is finding the right customers who are willing to pay for your service, and at the same time being able to scale that into the next stage of things. So when we started, we had 15 clients that were onboarded. We had very positive feedback from the user base, but also the businesses that we're working with. But now, as we're going into Q1 of next year, we're trying to convert those into paying customers, and at the same time, really address the TAM, right? Like, how do we get the top 10% of applications to really see the value that we're creating and not just being kind of a noise layer for messaging, right? So I think for us, it's very simple. We are a B2B2C kind of player, and infrastructure is one of the services that I think has the, I guess, fortunate luck to provide immediate use for the customer base and the community once implemented. So yeah, that's a little bit from our perspective.
Yeah, to define product market fit, I would say your product does what it promises to do, and you can scale users. So you can fulfill that promise to the next customer and the next customer that comes in, and they're showing up because they want that result. I feel like that's probably it. For us, it was very clear that you have to bring in everyone's transactions, clean them up, and match their hand calculations or the hand calculations of their tax professional or an auditor. So there's just a very objective standard that we had to reach, and we could test if we were hitting it or not. And that was all we aimed to do. And we got that about 9 to 12 months in. We had an MVP up in 3 months, and then just kept iterating, and then we were able to turn on billing after about 9 months.
Chris?
I think the way I see product market fit in Web3 is very counterintuitive. Disagree with the defining market share first, the Web2 approach, because the market changed a lot. You defined market share yesterday, and today it's down by, I don't know, 40% now. So the change a lot to us. It's just ask what the users want and build things that they want, even if just 10 users, because Brian from Airbnb, he mentioned he was at a Master Skill conference 2 weeks ago. He just mentioned that in the early days, all Airbnb did was to build things that don't scale. They would go to door, take photos of the rental houses, and just talk to the owners themselves, do things that don't scale. But they got first-hand experience of how to managing, how to convince the host to rent out his house at Airbnb, and how to build the advertisement around that. So, and CZ posted, I can relate to this tweet. CZ's tweet, he said, "I never had a grand vision for Binance. We just build and adjust." So that's what we're doing. So we have community members telling us, "Hey, you build automation, it's cool. I want to automate my NFT trade." And we hear voices, a lot of voices like that, maybe 100 of them, and we're like, okay, we'll put NFT into our product roadmap for end of the year.
Great, Krishna.
Yeah, I think product market fit is some signal from the market that whatever you're providing them is valuable. I think one way of thinking about it is sort of the Web2 maxim, where you think about, okay, does a user want to pay for this product? In Web3, it could also be a public good, right? It could be like a ZK rollup, which is not necessarily a product. I guess the product you're selling is block space there, but the way that the product is delivered is different. People are using this public network. It's sort of like meta product, and they could be using multiple apps on it and interact with your chain without even them kind of endorsing your brand necessarily. They just go there for the opportunities. But I think it's really important to sort of think of it in an iterative way, like Chris said. A lot of the time you start off with something and you see if someone's willing to pay for it, and then down the line, for example, for us, people started asking, hey, do you know where I can find insurance for smart contracts? And that was a very important signal for us that this product was missing from the market. And, we decided to go build that, right? So I think it's very much in a nascent space like Web3, the trends change so fast. It's very important to be both like strategic and tactical from that standpoint. It's really important to sort of look at what trends are there and also differentiate whether a trend is there for just for the sake of like financialization or financial speculation, or like, is it a lasting trend? Is it repetitive? Like, are multiple people willing to pay for it over a number of years? And can you keep repeating those sales or those customer acquisitions, right? I think this is the sort of dilemma in Web3, really.
So I think that what you guys specifically have done really well, because I know we've worked with you for quite some time, is that not only are you asking your customers, is this useful? You're asking them if they're willing to pay a significant amount of money for it, not $25,000, but $250,000. And if they say yes, then you go and build it. Because I think there's a lot of tendencies among founders, especially engineers, to just go and build things because it's cool, because it's exciting, and you get excited in your head, but you don't know whether there's demand for it. So validating that demand with a sticker or a price is a good way to find product market fit.
I do want to add one thing too, though. So when we first started, the interesting dilemma that we had was trying to convince, project like builders that notifications were important, because they didn't see the value. Because a lot of the Web3 builders didn't really come from Web2 backgrounds, and emphasizing customer experience was something that was lowest priority because they're engineers in a sense, right? So what we did was we worked with like one DApp, and what we found a lot of feedback and acceptance on was their customer base, the user base, right? So we used that and leveraged that as like a justification to continue and go forward. But if we, pulled like 10 projects before, 9 of them would have said like, we're not interested in this. This is not a priority for us. But, we stuck through that, right? We stuck with the thesis that eventually user experience will triumph it, right? And I think we took that as kind of like our guiding principle versus taking the initial feedback and just stopping there.
Mm-hmm. Right. If you would have asked people what they want, they would have said a faster horse, right? So moving on to something that is very peculiar to the Web3 space, and that is finding your layer one. That's not something you have to think about when you build an internet startup. You have HTTP and you build on top of that. There are some decisions you have to make around your stack, but not as fundamental and existential as finding a layer one. So we have a good diversity here of projects built on top of different protocols. Why don't you start, Mark?
So we're on Avalanche. We're the first major game on Avalanche. The reasons we chose Avalanche was primarily subnets. Subnets are the ability to run your own validator node, so we can, number one, control gas price. You can't have a game where I'm buying something for $1 and the gas costs $4 or even $70, as it did last summer. Also, game developers love to own our own infrastructure, own and operate it, because our customers have very low tolerance for friction in this category. We needed our settlements to finish in less than a second. That's what AAA gamers are used to. Another important point was your existential is exactly the right word. What happens if Avalanche dead ends? How can we bridge to another platform? And when you looked at all the other layer ones, there was not a clear engineering path off of those chains and onto Ethereum, for example. But Avalanche had that. It's going to be painful, but at least it was clear to us when we made the decision.
So we were pretty out front and said that we were multi-chain from the get-go. Notifications, was a universal experience. We chose our L1s accordingly to kind of our go-to-market. We actually did our first prototype in ETH, did ETH transaction alerts, getting a simple text message when things happen. But when we went to go ahead and actually build and go live with our customer base, we chose 2 L1s purposely, because they had a great ecosystem of builders, and we are a B2B at the end of the day. And accessibility during that time was actually pretty paramount. So we actually chose Solana and Terra. because they had a very rich ecosystem. And we wanted to build our product, test it out, get iterations, get the feedback until we could eventually bridge into ETH and EVM, because that's where most of the user base.
So I have to happen. What happened after Terra came down?
So we went to near. So yeah, I think in general, like what our thesis was, like build a product, refine it, right? Get the immediate feedback as much as possible from a very like high advocate like community base like Solana and Terra, and then basically create this approach to be chain agnostic. And now, after ETH/EVM, we just announced a big thing with Polygon, and we're expanding into the Cosmos areas as well. But just like things have been changing in the last 3 months, like things kind of like change every single time. So L1s even have this like weird dance as well. So we just kept all our options out there, but our product was always purposely built to be chain agnostic.
Like all other crypto, we're actually just built on AWS. So we just bring in your transactions from any blockchain. So we integrate with dozens of them and with exchanges. So we're not really writing to blockchains, but we just read as many blockchains as we can.
How did you decide which blockchains to read?
So mostly by demand. So it's just an 80-20 or a 90-10. You do need backward compatibility. So if all of a sudden tomorrow people are trading on a blockchain that they weren't trading on yesterday, they'll need that by April 15th or October 15th. So we have some forcing functions, but also some time to think it through. Yeah.
So it's not as consequential as building on top of it.
Yeah, choosing layer one, like major ecosystem, are pain in the ass, like in blockchain. So we chose Polkadot because Polkadot has this open source blockchain framework for us to recreate the blockchain on top of it. But so in terms, because the money flows too frequent in this space, like we see one major ecosystem, boom, just took off, and the next day, 3 months later, it always just takes 3 months for people's attention to move on to a new chain. So what we did was actually to make our core innovation as scalable as possible. And we are always ready to move on to a new ecosystem. So that said, you cannot bet on a chain, like all the eggs in one basket. The adaptability is the key factor of a successful startup in Web3, I think.
Yeah, well, I think that's relatively new though, because I would definitely say like when we started in January, February, people were freaking out that we were like talking crap about multi-chain, right? Like they're like, you have to pick one, right? So I think it's only recent that post Terra that multi-chain is like starting to take off. So I would probably disagree. Like 9 months ago, I think it was a very different landscape. People wanted you to commit to one chain.
Yeah, true. Terra was the Ethereum killer. 9 months.
I think multi-chain is easier said than done. So I wish we had more time to dive into that. But as a startup, you have to be very focused with your resources and not spread yourself so thin. So how do you hire talent across multiple? Before we talk about talent, Krishna, what is your opinion about choosing your layer one?
Yeah, I think the question's almost flipped here because we analyze a lot of people's code across various chains. So like, one thing I definitely see is that while I do totally agree that like, multi-chain is the future, EVM specifically allows you a lot of optionality, right? So definitely that's a good start. I guess the only issue is that if you're going to port a lot, there are switching costs. So like, for example, getting an audit on specific chains would be way more expensive than other chains. It also depends on your use case. For example, a lot of the NFT activities primarily on Ethereum. There's a lot of gaming activity on other chains like Solana, right? So I think choosing where your integrations are potentially, and choosing what kind of engineering skill set you have, and matching that to what the properties of what layer one you want to be on. I think that's very important, but you want to have the ability to like switch out quickly as well, and have that kind of flexibility and potentially that talent on your team.
So let's chat about two other things if we have time. How much time do we have? actually. I don't see it because it's blocking. Okay. So let's briefly talk about talent. Talent was in the top 3 of existential challenges. Finding talent is always difficult, probably easier now, especially after what happened in the last 24 hours. And with the layoffs with Twitter, I'm sure there's going to be influx of talent coming into this space. So how do you go about building culture and recruiting talent?
I'm really glad Joe Lubin isn't here because I hired away his chief architect. So he's our head of blockchain. We're fortunate game development industry has always attracted top talent because it's a great fusion of engineering and creativity. And Seattle's a target-rich environment for game developers. So I've had no trouble attracting the right talent.
It's probably controversial, but I would not hire people from Twitter, especially the ones I got like. But no, I mean, yeah, I think for us, we've been very fortunate that we are kind of like this Web 2.5 infrastructure layer, and we happen to be in Seattle, and a lot of us have worked at either AWS or OCI. So attracting talent and kind of like the mission that we've been on is always been pretty clear. You know, improving customer experience for users is a great thing to rally behind. So haven't had too much trouble there personally.
I think you kind of need to fit talent to business model. So we've hired people who like to work together, who like to work remotely, who don't need a token for incentivization, who don't want to get rich quick, and it turns out they like to work together. So it would be completely different if we had a token or were.
Some of you employees were poached by companies that had a token.
They were. So that's something you're going to deal with. Like, you're going to try to poach people from companies, and then you're going to have people get poached from companies. I think one sign that you have a good culture is that you are mostly retaining people. When they leave, it's for something like outlandish compensation and not like, I hate the people here and I hate working here. And then when you're hiring and your team has a number 1 pick and you put out an offer to that person, it turns out that you were their number 1 pick too, right?
Yeah, the market is amazing in terms of talent acquisition right now. But one thing I want to add is that the globalization in hiring is unstoppable, because look at the hiring platform deals valuation just skyrocketing, and Coinbase have hired a lot of employees through them, and we are hiring too. We just saw so many more engineering talents available in terms of overseas and readily available and cost efficient. So we're doing that too, and it has been successful.
Krishna, I think last I heard from Richard, you were hiring a person a day or something like that. Is that?
We're hiring like a person a week, or something like that. Yes, I think we've been very successful in hiring engineering talent from you know, sort of the retention perspective and a talent perspective. I mean, when we hire someone, we set an extremely high standard for skills as well as cultural fit. And we try to look beyond where the places where people normally look, right? We don't use external recruiters. We don't hire primarily from New York or San Francisco, where there is a higher degree of turnover, generally speaking, because there's so much liquidity in the area. We try to look for the top 1% of talent all over the world and pay them way above market. We give them a really nice remote environment, as well as the ability to meet offsite, work together with their colleagues in various cities, or you know, and having a small team definitely helps with that, because you know, we wouldn't be able to do this with like at like the scale of like 2,000 people. But at our scale, I think you know it works really well, and like people generally like to stay here because they're focused on their work. We have a lot of impact in the space, the security company, and they love working with their colleagues, and they're paid really, really well relative to their jurisdiction. So if we're looking at it globally, like Chris said, I think you know, you can get the top 1% of talent, which is equivalent to New York or SF. And you know, if you set the standards high enough.
Great. So we're going to end with a lightning round again, even though I haven't thought about what I'm going to ask yet, but I will. But before we do, maybe a question or two from the audience. Go Go ahead.
Hello. Okay. I have a question for Chris. First of all, thank you all for the presentation. Chris, you said something about Ethereum not supporting like transactions in the future. From the way I understand the network, there's a way you can like pre-sign a transaction and have it executed in the future, which in my understanding you can kind of use that to implement a subscription. Maybe I'm missing something. I was wondering, why are you not using this and are building a separate blockchain?
Yeah, this is a very specific technical question. I'll keep it short. Note that you use the word kind of, right? Subconsciously, you know it's kind of. So it's an announce problem. You sign today and you do some transactions, your announce, the pre-sign announce would be invalid like 2 weeks later.
Thank you, appreciate it.
Yeah, I wanted to go back to product market fit. I noticed that the answers didn't mention community development, community maintenance, all of those things. And I was wondering if you could provide your thoughts about that side of product market fit.
It's probably the #1 initiative in my company besides making the game, is developing a community. We're doing a token offering in early December and trying to drive to 6,000 Twitter followers. It's considered the standard for an offering like our two. One of the things I observed when I looked at other game companies that had done an IEO was they did a fancy trailer, did their IEO, and then went dark on their community, and their token just went parabolic and then circled the drain, right? So we planned a series of engagements that will utilize the token and get the community involved in the actual design of our game.
We're more of a B2B, so our community would be the builders who want to build on top of us and use our developer services. Yeah, I think our go-to-market there has always been making sure that we build the best tools and just re-emphasize simple ease of like implementation, documentation, and foster that kind of like building for your user on your behalf of. But we haven't had the same kind of trials and tribulations for like Discord and Twitter that more B2C projects have.
I'm good. We're hiring for developers. If you're a developer, well, come talk to me.
All right, so we're going to go into the lightning round, which is going to be slightly different, not overrated, underrated. But you have to answer the question with one word. And the question is, what Web3 project you think has the highest product market fit today?
MetaMask.
Maybe OpenSea.
USDC.
I won't say USDC, but you already said it. Maybe Notifi, which is solving a really pain problem to developers.
Notifi. Didn't expect that one. Last question. What is your... Oh, Krishna, sorry. Go ahead.
Oh, perhaps Dexus.
One example, Uniswap, SushiSwap?
Uniswap. Yeah, Uniswap.
Okay. Fair enough. Nobody mentioned Chainlink or MakerDAO. Interesting. What is your #1 most contrarian prediction for the next 5 years in crypto?
Well, in my industry, contrarian is blockchain is widely adopted and it drives the ascendancy of Web3 out of the current doldrums that we're in.
I think wallets will die. Yeah, I think they should die is kind of the better aspect of it. Yeah, I think it's just like not a great user experience to foster in 1 billion users for the next foreseeable future.
What would be the replacement?
Web 2 style application experiences.
Anytime someone's trying to sell you a token and they're just gonna sell it out to Bitcoin and cash. Don't give them your token or your money. That's just my contrarian. Everyone else is telling you to do that.
I think Ethereum already got too big, and nobody can challenge the position of Ethereum. So I personally haven't invested much time into the new public layer ones, the 2 new ones. So, and I'm not bullish on those. Also, there might be specific purpose of major ecosystem, maybe Avalanche, maybe Solana, Polkadot, that can providing like unique service in addition to Ethereum. But in future, we'll consolidate into 5 or 6.
Krishna.
I think people will take, especially after the last few months sort of scandals, I think people will take decentralization more seriously. And I think, you know, a lot of the financial stack around that's not on or off ramping at an exchange is basically going to run on some sort of decentralized infrastructure. I see less and less of, especially as exchanges get more regulated. I think they serve as like on and off ramps, and you know the decentralized tools serve everyone else, and I see that reality happening for sure.
Amazing. Well, thank you, our panelists, for a great conversation. Let's give them a round of applause.
Thanks, Kate.
And we're about to get started with our last session for the day, facilitated by one and only Andy Sack, Managing Director of King Crypto, the Fund of Funds, co-founder of Forum 3, and an advisor to Bloccelerate. The conversation will be with Tyler Hobbs. Tyler Hobbs is an NFT artist who was previously a computer engineer, and he will tell you a story about co-founding Fidenza.